The Informed Investor, thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.
I'm very pleased to say the chairman of Century 21, a man who knows more about real estate right across the country than anybody else in Australia, Charles Tarbey, is back in the studio with us. Good to have you back with us, Charles.
Thank you very much, Steve. Lovely to be back after.
And lovely to have your intelligent comments on real estate, because there's too many people around who think they're experts and they keep spruiking all this stuff. We had an economist last week, I think for about the 10th time in a row, say, Australian real estate, it's in for a major crash. Everybody's going to lose their shirt. The property market's going to collapse on us. It's just absolute rubbish, isn't it?
Was this the demographer? I think it's
this is a bloke from the US who's
Harry
out here
Dent.
flogging books.
Yes,
That's
Harry.
him.
Harry comes out every year. I've talked about Harry a lot, and he's obviously an educated man. I just look at some of his history and I recognise that even back in 2014 he said the same thing. And if you had listened and if you'd have sold your property because the crash was coming, you would have lost a significant amount of capital growth. And that's the issue. A lot of these guys don't get held accountable for what they have suggested to people that they do, and it's a massive, massive thing to be telling somebody, get the hell out of there. When people ask me for advice on real estate, I always go down the very first approach, and that is, do you have to sell? No. Does the investment pay for itself? Yes. If the interest rates jumped up 1% or 2%, would you be in an okay position? Yes. Well, look, sit, because, most, as we all know, real estate takes a little bit of time sometimes to grow, but when it does, it happens very quickly. And as I said, if a lot of people had listened in 2012 and 2014 to this very conversation and sold their property because the crash was coming, they would have missed out on a significant amount of capital growth.
Would they ever? If you have a question about real estate, and it doesn't matter where it is in the country, and we're on 56 stations right around the nation, give us a call on 131 873. Charles will be able to pick your suburb, pick a price, give you some advice on it, tell you whether you should be investing there or not investing there, or you may move to another area and you might be moving from interstate, from New South Wales to Queensland, or from Queensland to Victoria. You might be going to country area and get some advice on exactly what sort of prices you should be paying. So what is the state of the market currently?
It's a very interesting marketplace, even though the stats have had a downward trend in them. Mind you, Melbourne still has vacancy rates of 1.16 last week. It's been the best performing state overall for the capital city for the last 6 months. Even though it has that, the auction clearance rates are changing, Steve. They was, for Melbourne particularly, they were 67.3% in this last weekend gone, and they auctioned 1,523 properties, and I can tell you that it was 78% this time last year, which would indicate to me, even though it's an 11% drop roughly, 67% is still a very good clearance rate. We call the market in dire conditions when clearance rates are 40 to 50%. So even though the agent's having to work harder, and I particularly like that, because that means that a lot of the Facebook warriors that joined the industry in the last few years that managed to promote themselves as real estate practitioners, well, today they're having to learn how to actually sell real estate. So most of them won't make it through. But I still think 67% is a very good clearance rate.
And it's such a broad question, how's the market? Because, the answer to that is it depends where you are. Depends if you're talking about a house or a unit or high-rise apartments.
Oh, gosh, yes.
Should I be buying apartments here? All those things. So how's the apartment market? Because clearly there was a story today, I think, in The Australian suggesting that a lot of the Chinese who in the past have been coming out here during Chinese New Year and buying investment properties are having trouble accessing cash to get out of China to come and buy these places.
And Steve, you raised this, you and I were speaking about this last year. We warned people that not only is the issue of bringing money out here a problem, but the declining values is also a problem, because when you go to revalue a property, which the banks will force people to do maybe 2 or 3 weeks before the buildings are completed, and you've got 40-odd thousand apartments coming up in Brisbane alone that need to be completed in the next 24 months. And you've got to ask yourself the question, will the valuations stack up? Because if they don't, not only will these people have to find more cash, but there'll be a significant number that may not be able to complete, and that could impact on the overall development. So you probably notice there's advertising out there right now about apartments that you can buy in Brisbane, and they're going to give you 5 years to settle, all those sorts of things, because the developers are looking for creative ways to get people to buy the properties without reducing the prices, because if they reduce the price, it's going to impact on the entire development and every valuation within that development.
So in the capital city markets that we're talking to tonight, Brisbane, Sydney, Melbourne, do all of them differ in the way that the apartment market is travelling?
Yeah, Sydney is still travelling well, because not all Sydney. I've noticed a lot of developers have shelved or are selling their developments before they've even started. So there's a little bit of selling off in certain locations. If you're in the cities, if you're heart of the city or within a few kilometres, you're very, very sound. Melbourne, same thing. As you get further out of Melbourne, there's a few apartment complexes that are really looking just a little bit on the edge. Brisbane is probably the most significant one. You wouldn't believe it, but Sydney had a 75% capital growth in the last 5 years, and Brisbane only had 25%, and in the apartment market, only 0.9% in growth. So there's areas of Brisbane, for example, that you've really got to look at very, very closely before you make a decision. And in fact, I think are going to become great opportunities within the next few months.
That's why this guy's so good, everybody. He knows his numbers and he knows how to give you advice. Max is online in Narre Warren. Hello, Max. You there, Max? No, Max is not there.
I think we've lost Max.
Max is a property in Narre Warren. His question was, do you think it's a good idea to sell it or keep it?
Right. Well, Narre Warren's one of those areas, as you would know, is still a growing area. That whole, all the way through that area has still got a lot of growth in it. I think that he's safe, very safe, in sitting there for a little bit longer. But again, I don't advise, as a real estate agent, I should be telling everybody to sell.
So what's the Narre Warren market like?
But yeah, I prefer to tell people not to sell. I know it sounds strange coming from a real estate agent, Steve, but I think if people don't have a reason to sell, they shouldn't. And the only time they should be selling is if they're buying in the same marketplace. So if Max is looking for a property in the same sort of market area, I wouldn't matter whether I sold.
I think we got him to go still there. Hello, Max, are you there?
Yes, I'm there. I wanted to know, because I'm having a substantial gain on my investment in about 2 years, I wanted to know whether I should leave it as it is, or because I want to just otherwise break it down and build a house on the same premises. Would that be a better idea?
So, Max, you bought an older property, did you?
Yes, I did.
Oh, I see. And how much life has it got left in it?
It's already about a 25-year-old house on that, but I'm getting rental income on that. I have no issues with it. As it is, if I leave it, I still get rental.
Yeah. Max, I as I was saying earlier, when we couldn't get you on air, I'm not an advocate for selling houses, which, again, is the opposite to what you might hear from an agent. I would only suggest you looking at selling if you had another opportunity, Max, because if you've got something that's getting good growth, you're in an area, Narre Warren's a strong area, you've got all the shopping facilities, all the transport. It's one of those areas I'd probably keep and use as equity to buy another property.
Yeah. Don't go through the grief. Anna's in Green Valley. G'day, Anna.
Hi there. I was just wondering, my husband and I, we purchased a four-bedroom house in Caboolture 11 years ago.
Wow.
And we haven't seen a single growth. At the time, we did a lot of research and all the Queensland government and infrastructure projects, and we got sucked in, unfortunately.
You know, I was just talking about
What's
Queensland.
What's your story on Caboolture?
What's your advice be?
Yeah, I was just
Thanks,
talking
Anna.
about Queensland, Anna, and how it hasn't had the growth of all the other capital cities. And there's a few reasons for it. The economy itself wasn't as stable as Melbourne and Sydney. But that area, that's a great corridor. If you've been sitting there for a little while, I wouldn't be saying to you now's the time to sell. I'd be saying to you now's the time to hang on, because some capital growth is coming your way. If you head even further up and you go up into the Redcliffe area, that's booming, that area now. North Lakes, Burpengary, they're all areas where they're very strong. You've got the railway line that's gone through now. So I'd suggest the capital growth that you're going to get is not going to be fantastic in a hurry, but you're on the way up very slowly, but you're on the way up.
Good advice. Prue's in Rye. Hello, Prue.
Yes, hello. I'm in Rye. Well, obviously. I'm just curious about what you think about the growth of the Mornington Peninsula.
Yeah,
It's
it's a very interesting area, isn't it, Steve? When you look at the fact that when you drive through that area and you go through Frankston and you look at the Frankston, and we call Frankston Penrith by the Sea, by the way, and you look at the all the different styles of homes in Frankston, where you go from the absolute first home buyer to some really, really incredible multi-million dollar properties, and that whole area is actually quite a beautiful area leading all the way down to Rye, and I think that area, of course, there's a lot of money being invested down there with golf courses, even more so now, even though there's a significant number. And I still think that area has got some good growth potential in it. And a lot of the growth is feeding out still from the Melbourne market. It's still dripping out into those areas.
Well, it's become much more of a possibility to commute. You've
Correct.
got the new toll road that gets you back into Melbourne. It only now really takes you about an hour and 10 minutes. Are you on the bay side or the ocean side of Rye, Prue?
The Bay side.
Yeah. Okay. I know I don't like the Nepean Highway, Steve, at certain times of the day, but, that area to me, as you've just said, a lot of areas in Brisbane, Sydney and Melbourne have become areas where you can commute now that you never used to be able to. And so people don't mind spreading their wings and living a little bit further away and paying a little bit less. So I don't know how long ago you bought it, Prue, but I still particularly like that area.
Quick one from Phil in Glenfield. G'day, Phil.
Yeah, g'day. I was just driving from Glenfield to Liverpool today, and there's that many cranes up there. The units are 30 stories high down on the south side of Liverpool.
Yep.
Then you go down to Warwick Farm, which is all sold out. But I just think it's going to be a ghetto, and they're all going to crash eventually.
I think the Liverpool area has changed significantly when you think about Glenfield. Of course, you've got a lot of industrial area around it, so you've got a lot of people who work and live in that area, so it still has a strong strength to it. But as you do go further in Liverpool Council got very aggressive in the last few years, and they've got not only those apartments you're seeing going up, but they've also got all along the riverbank there. That's yet to be developed and still going up. So those are areas that concern me. As I was saying earlier on, as you get further out of the capital city, and Liverpool is a reasonable distance away, those areas are probably going to battle a little bit in terms of valuations, because the Sydney market itself in certain areas has declined in the last quarter in values.
Great to have you back, Charles.
Thank you very much, Steve.
Charles Tarbey there, Chairman of Century 21.
The Informed Investor, thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.